Welcome back to Roxham TV. Today we have breaking news from Asia. Japan just confirmed that they will be raising their interest rate to 0.75%. And this is a high level that we haven't seen in 30 years. And meanwhile, US is doing better than is actually doing better than expected because we have the inflation data coming out yesterday, and the expectation for the inflation number was actually 3.1%, but end up we getting 2.7%. Of course, that is better than expectation. However, this is kind of putting the world in a difficult spot. On one hand, there's tightening liquidity from Japan. On the other hand, we know that US has ended QT and only QE gonna come, and for sure, whoever replaced Jerome Powell for the next term, he's gonna cut rates drastically. So there's this like tug of war dynamic between the US and Japan. Only time will tell how would that impact the market, but for sure, Bitcoin is experiencing some volatility. So this is one news we have to go over. The second major topics we have to talk about is Epstein files. So there are new photos being released by Democrats. So the timing why is very interesting because we know the deadline is actually tomorrow, and Democrats very interestingly chose this timing to release some more pictures, and some really well-known figures are actually involved in those photos, including Bill Gates. And that of the topic, the thought that major agenda is actually Tesla, because Tesla is breaking new all-time high, while Bitcoin is kind of sitting on this sideline, doing nothing or even crashing a little bit in a bear market. So why is that? We're going to take a look at AI, especially the AI war between China and the US, because Donald Trump, what he's trying to do is trying to release the advanced AI chips to China, but China is refusing the offer. Well, Xi Jinping is saying, well, for the AI production, it has to be domestic AI production chips. So that's a really interesting dynamic. And the fifth agenda on our show today is actually New York Exchange, because they're diving even deeper into crypto. They're investing, looking for some like interesting investment into MoonPay. Of course, that being one of the biggest retail crypto phone app in the US. Well, there are so much news to go over. So without further ado, let's actually start with some chart analysis. So actually start with Bitcoin, where Bitcoin is heading to. We're probably not going to spend too much time on the chart because honestly speaking, there hasn't been like a lot of changes ever since our yesterday show. At the end of the day, this is a bear market. So in a bear market, even there are good news, that doesn't have much effect in in Bitcoin's price anyway. So let's start with the daily chart, and we're slowly going to build up the time frame. So the daily, as I mentioned, is just in this general downtrend. We got rejected at these key levels every single time we got close. So this downtrend, it has been built up since 6th of October. So it has been building up for more than 2 months. And whenever we get close to this downtrend, we end up getting rejected. And looks like this trend is going to continue to play out. Like, I will be really surprised if we manage to have a daily candle actually close above this downtrend. If so, maybe I have to recalculate my math and maybe things gonna turn around. But like, judging from a technical perspective, looks like we are not out of the wood anytime soon. So here, that's one bearish sign I'm seeing. And other bearish signal is actually on the RSI, because like we broke out of the support on the RSI. We went to as low as below 20. So very close to 20, so 21. Like, we built this nice support whenever we like touching this upward trend. Like, we found support and we go higher. However, things kind of turn around on 12th of December, and so far we just have been hovering around 42 on the RSI, which is not like a bullish setup we want to see. That's not what the bull want to see. And the question is, how long will this last? According to the 4-year cycle, it looks like it's gonna last till next year. So actually, wait, let me turn on the weekly candle right here. So it looks like it's gonna last till October 2026. So like, for the degens out there who want to time the market, like some of my investor friends, they're looking to scoop up more BTC around the cycle bottom being October 2026. But the 4-year cycle is again a very controversial topic. It depends on whether you believe this actually still matter in this day and age. So let's actually hop on to the weekly chart. And for the weekly chart, again, more bearish setup I have been spotted here, that I've spotted here. So the first one we have to pull up is, of course, the Ichimoku cloud. Ichimoku cloud is again a forward, a leading indicator. So RSI is lagging. Ichimoku cloud is a leading indicator. So how do you read this? Is basically Bitcoin is trading inside this region. So inside this cloud, that means more likely or not, in the coming weeks, we'll be consolidating inside this cloud. So kind of like bouncing around. Like, I won't be surprised to see Bitcoin getting to as high as 100K. But if we, whether we manage to stay above 100K or get rejected, I mean, I have my doubt. Like, I would be really surprised if we manage to stay above 100K for a sustained period of time. And for the coming weeks, perhaps we're going to find support at the span B, so being the red line on the Ichimoku cloud. We're slowly building up this this upward momentum on the support. However, if we zoom closer and look at the Ichimoku cloud, the red line is trying to take over the why is this keep happening? So the red line is trying to take over the green line again, because Ichimoku cloud is a leading indicator, and this is a really bearish setup. So in other words, from a technical perspective, at least till Q2 and maybe Q3 2026, like from a technical standpoint, I don't see any reason that Bitcoin would turn around anytime soon. So call this short term or medium term, but like, whether you like it or not, I'm just throwing out data for you guys, and you guys could draw the conclusion whether you think this is a bear market, or because Bitcoin is getting into such a macro asset right now, all the smart money, all the institutions' money are here, so we don't end up seeing a prolonged bear market. Well, anyways, how low could we go? Let's actually close the Ichimoku cloud and pull out the 50-week and 200-week moving average. So the confirmation that I got, so why I managed to call a bear market early, is that if we have 2 weekly candles below the 50-week moving average, being the blue line here, that's the definition of a bear market. So how low could we go? We actually need to pay attention to this like red line over here, being the 200-week moving average. For a bear market, most likely Bitcoin will find support near the red lines and near the 200-week moving average, because that's kind of the case back in 2022. And but like back in October 2022, things got like even worse. We dipped below the red line because there's so much FUD in the market, so much negativity around like FTX or Three Arrows Capital, etc. So this is more like a reference we could look at. Like if the cycle bottom will happen in October 2026, and of course right now 200 week is sitting at 57k, around 57k, but like this line gonna slowly catch up because that's what moving average does. It smooths out the price action, so it doesn't seem so crazy and more basically more sustainable. So if this line slowly catch up, and if we end up seeing a cycle bottom on basically on exactly 5th of October 2026, then the price would be around $66,000. So this is just a reference we could look at. Like again, TA is telling you where could be the floor and where could be the resistance. And judging from the 4-year cycle, that's roughly the time frame we are eyeing very closely here. So for the rest of the December, it looks to me like it's just going to be chopping around, especially consolidating inside the Ichimoku cloud for a little bit. All right, so one thing I also noticed is that there are more Bitcoin long-term holders are selling, and they're selling like crazy. Like, how do you read this? If you zoom closer, you can see a huge pile of red toward the downside, like toward the on the red side here. So these are long-term holders selling at the BTC, and looks like okay, they haven't slowed down much at the moment, but this is just what happens during bear cycle and bull cycle. This is just how market works. Like long-term holders, they are more than entitled to take profits because they have been holding the BTC for a very long time. They might need their money for, I don't know, buying a mansion or doing certain stuff. And I'm not trying to blame the long-term holders right here, but like very likely the selling gonna continue. And when we get to a point that the seller find it is low enough, usually the case is that when price fall, like pay attention to the action that the whales are doing. When the price of Bitcoin fall, the whales would ape in and scoop all the BTC. When the price are rising, they will actually take a massive profit here. You see like the massive red pile to the downside. So this is usually how high IQ or big whales play the Bitcoin market. And so far, since Bitcoin is still pretty high and they are taking massive profit, maybe we have to wait till them to settle a little bit, take a little bit more profit off the table. And once the whales feel like Bitcoin price has reached low enough, then they'll be comfortable to ape in the market again, because this is just how market cycle works. All right, so that's for the BTC analysis. Like moving on, we're gonna look at macro a little bit, but like before doing that, let's take a little break and I'll see you guys in 3 minutes.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, Tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
He's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Alright guys, welcome back. As I mentioned, we're going to spend some time looking at the macro because we have breaking news from Japan raising interest rate, but at the same time, US inflation data is looking better than expected. So let's actually dive in and look at the breakdown of the number we've got here. So the latest US inflation report came in much lower than expected. Headline CPI for November is actually 2.7%, below the forecast of 3.1%. And when we look at the core CPI number is sitting at 2.6%, the lowest since 2021. This is the first clear slowdown in months, and markets took it as a signal that the Fed may cut rates in 2026. So if we look at the actual breakdown, the energy index increased 4.2%, and for food prices actually rose 2.6%. Shelter costs was up 3%, and other notable increases were recorded for medical care. It rose 2.9%, etc. Meanwhile, the core inflation, as I mentioned, came lower than expected. So overall, inflation isn't hot anymore. is really cooling. But here's the catch. The US had a 43-day government shutdown. So the BLS did not collect the October data right here. They had to copy and paste September prices into October. This made the November report look cleaner than it really is, especially for housing. Some economists say shelter inflation was actually underestimated by quite a bit. Still, even with the data issues, most experts could agree that inflation is really cooling down for real, and the trend was already slowing before the shutdown. And if we look at the unemployment rate that the data we've got released recently, is ticking up and sitting at 4.6%. So this is what the US is doing. Let's now hop on to Bank of Japan because we have latest news literally broke out a few hours ago in Asia time zone. So Japan just raised rates again from 0.5% to 0.75%. That's the highest level since 1995. Inflation in Japan has stayed about 2% for almost 4 years. If we quickly hop onto the chart, here is the 3-year time frame we're looking at. Inflation looks like it's going down, but like it got to a crazy number that was back in January 2025, and Japan hit 4% inflation. Well, it might be not a lot compared to Western standard, and especially compared to Europe, but like it is quite a lot in Japan's era, because like Japan has actually been suffering from deflation for many years, for like a decade. So-called the Japan lost decade. If we zoom out to 10-year, the pictures are even clearer. In 2020, back in 2020, Japan went below. It was like a negative number, and even back in 2016, it was barely any inflation, so like 0.3% or 0.2% inflation. So that's why this is getting severe for Japan. So the market reaction, let's actually go back to the article and look at how the Japanese market is responding to the rate hike. So if we take a look at the Japan 10-year treasury, like the 10-year bond yields hit the highest since 2007. We are here looking at the 6-month time frame. But if we even zoom up to 5 years, like this is a parabolic chart. Like if this is some altcoins, I'll be extremely happy. But this is a level that we haven't seen in a very long time, like since 2007. And if we look at how the Japanese yen is doing, Japanese yen is really gaining momentum against USD. So in other words, Japanese yen is looking stronger compared to the US dollars. Borrowing costs in Japan are also rising, and Japan governments are responding with a launch of 17 trillion Japanese yen stimulus package to soften the blow. So the BOJ, the Bank of Japan, says more rate hikes may come in 2026 next year, possibly hitting 1% by mid-year. But Japan must be very careful because the debt level is huge, like over 230% of GDP. So this is a really interesting dynamic we are seeing between Japan and also between the US. Like this is like a tug of war. The US is easing. That means more liquidity is going to enter the market to support the market growth, whether it's S&P stock market or even crypto, while Japan is really tightening liquidity and pressuring markets. Japan raising rates is a big deal because it unwinds the yen carry trade, where investors borrow cheap yen and invest in US stocks and bonds and crypto. When Japan raises rates, this trade becomes harder and money flows out of risk assets. So this could lead to liquidity drain and volatility in bonds and stocks and crypto. In other words, short-term wise, Japan is tightening. That means like market would wobble, aka like Bitcoin and risk on asset. Short-term wise, It's also aligned with the TA I was doing a little bit earlier in the show, looking like at least Q3 things are not going to settle for BTC, so there's still some downward movement. I'm eyeing at least Q3 2026. Long-term wise, since US is cutting its interest rate, inflation looks like it's coming down, unemployment rate is going up, so it justified the rate cuts in the US, and long-term wise looks like the market will recover. So 2026, it could start really tight but loosen later. Things are pointing towards Q3, at least Q3 or perhaps Q4 in 2026. So what does that mean for Bitcoin? Bitcoin gets hit hardest when liquidity tightens, and that's exactly what Japan just did. In the past, like BOJ hikes caused at least a 25% BTC drop and carry trade unwind, which would force selling and adding more pressure on crypto. But the good news is that the US inflation is cooling down and unemployment rate is going up. Like that's bad news, but like in here, in a macro standard, unemployment rate going up is actually good news because it justified those rate cuts from the Fed. So this is not a Bitcoin problem. It is a macro liquidity being reset. So short term, again, very bearish for Bitcoin. Medium to long term, if US cut rates and Japan slows its tightening, Bitcoin has room to recover strongly into late 2026. So perhaps Q3 or Q4. All right, so that's for macro. Let's move on to the next major breaking news. Like this came in hot literally just a few hours ago. What happened is that Democrats on the House Oversight Committee released another 60 to 70 new photos from Jeffrey Epstein's estate. These came from a massive archive of 95,000 files taken from Epstein's computers and records. This release dropped just one day before the DOJ's legal deadline to publish the full Epstein files, which is why the timing really does matter. Democrats say they are doing this to pressure the DOJ into full transparency. Republicans say Democrats are releasing selected images to control the narrative. So what's actually new in these photos? Well, there are three main categories. Like there are photos of Jeffrey Epstein with well-known public figures. Those are not illegal activity. It shows proximity. So these people include Bill Gates, include David Brooks, include some former YouTube CEOs. So these photos raise questions about Epstein network, but not particularly guilt. And the second group, like the second category, are the most where the attention have gone to. For example, there are pictures of foreign passports and IDs of young women, photos of women with blurred faces, and text messages discussing sending girls and pricing and ages. This evidence aligns with what victims have described for years. And then we also have the third category, not sensational, but relevant. So there are pictures showing property blueprints, Epstein passports, and a prescription bottle. These help map out Epstein's logistics and movement. So why does this matter so much? Like this isn't about the images alone. It's about what happens tomorrow. Democrats are releasing photos now to publicly pressure the DOJ. If the DOJ release is heavily redacted, expect immediate political backlash. So here's what we have to watch next. Like, will the DOJ release everything or hide key names? Do more photos or pictures show Epstein's operation or logistics? Are the financial documents included in the next batch? So the next 24 to 48 hours are the most important for the Epstein case since Maxwell's sentencings. So why do you have to pay attention? Like scandals like this erode trust in powerful institutions. Moments where the public sees secrecy and elite protection often push investors toward decentralized systems, which is why Bitcoin typically becomes part of the conversion wherever the Epstein files resurface again. So here are the breaking news. Let's move on to some AI news right now. So Disney and OpenAI partnership, like these are, we're going to spend some time, a huge segment discussing AI in this show. So what just happened? Disney and OpenAI, there's major partnership. Disney became the first big studio to officially license its characters to OpenAI's new video Sora and its image tool ChatGPT Images. What this means is that users can create short AI videos and AI images using real Disney characters legally, safely, and inside Disney rules. This is a big shift because Disney used to fight AI companies for using its characters without permission. In fact, the same day as the deal, Disney sent Google a legal warning for using Disney-style IP in its AI tools. So Disney is now choosing when to fight AI and when to partner with AI. This is a huge matter, and it goes to say what other studios are doing. Other studios like Warner Brothers, Netflix are also exploring AI deals. YouTube has already removed many channels that made fake AI trailers using Disney-like characters. So what Disney is trying to do here is to stop fake AI content and control how its characters are being used and really make its own official AI tools and keep fans inside the Disney ecosystem. This deal is partly Disney cleaning up the mess and partly Disney opening the doors to new ways to use its stories and characters. So looking at the deals, there's some key details. In terms of the length, it's going to last 3 years total. What OpenAI can use is over 200 Disney characters and designs. That would include Disney classics like Mickey and Minnie, Frozen, Belle, or like Pixar, so Inside Out, Toy Story, and a bunch of other Marvel and Star Wars characters. This can appear in short AI videos made with Sora and AI images made with ChatGPT images. But what is banned is that there is strict rules that no real actors' faces and voices are allowed. So no celebrity deepfakes, no harmful content or illegal content. This is to avoid scandals like the past, some controversy using celebrities' faces to do certain content. And OpenAI gets Disney content exclusively for 1 year. After that, Disney can license its characters to other AI companies. And in terms of the financial structure that we are in this deal, Disney we're going to invest $1 billion in OpenAI stock warrants. So no actual cash paid, no upfront licensing fee. Disney would earn only if OpenAI grows. So how fan could use this? So how could you interact with this new tool? Starting early in 2026, users can make short Sora videos with Disney characters. They could see selected creation inside Disney Plus, and Disney Plus will also use OpenAI to improve recommendations and interactive stories. Disney actually, this is a very interesting setup because Disney used to hate AI, but what they found out is that they cannot stop AI, even if it sues companies. AI models will keep getting trained and people will keep generating fake content. So instead of fighting the entire industry, what Disney chose to do is to control the content, is to protect its brand and to make money from AI instead of losing money to other companies. Some insiders say Disney also wants a strong tech partner to compete with Google's AI tools. So for OpenAI, this is even bigger because it opens a path for more studio deals. It makes Sora much more attractive, even compared to AI, other AI video tools, other options in the market. This could also reduce fears about AI stealing content because now there's a clear legal model for using IP. But of course, some people are going to hate this tremendously, especially when it comes to animators, like the people who draw all these characters. They fear they will get fewer jobs and more AI will replace human and higher stress inside Disney studios. So the industry is pretty split right now, excitement versus fear, but this is inevitable and it's part of human evolution and nothing can stop AI at this point. Good thing is that AI we're going to need blockchain and digital assets for transparency and payment. So there will be a lot of synergy between the two sectors, so Bitcoin and AI. Well, moving on, there are more AI news. So we're gonna next segment of the show, we're gonna spend some time looking at the AI battle between US and China. But before we dive in, let's take a little break and I'll see you guys in about 3 minutes.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
My plenty of spreadsheets, and my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Alright guys, welcome back to Roxum TV. As I mentioned, we're now going to spend a little bit more time looking at the whole AI sector because there's a lot going on, and especially between the US and also China. There's a major battle because in early December, so just this month, the Trump administration announced a new interagency review system that could allow Nvidia's H200 AI chips to be sold to China once again, but only with strict checks and with a 25% fee. This is a major shift from the older Biden-era rules, which banned advanced chips to slow China's military and AI progress. The H200 is one of Nvidia's more advanced AI chip and is almost 2 times faster than the H100 for large AI models. It is key part of the global AI race. So how the new review process works right now. So of course, the chips are still being made in China, still being made in Taiwan, sorry. So Taiwan TSMC. Before going to China, they must be sent back to US for inspection. And then US agency would run a special security review. What they would check is actually some military risk, national security concern, and whether the customer is safe. If approved, the US would then collect a 25% fee, then the chips can be exported to approved customers in China. This rule also applies to AMD and Intel AI chips. So more important notes is that high-end chips like the Blackwell series remain strictly banned. So there is no argument of going to China from US whatsoever. Question now people are asking why the US is doing this and why are they allowing some chips to China again? So here's what Donald Trump and his team argue. If the US blocks chips, China will just build its own faster, and Nvidia needs the Chinese market to stay strong and keep the revenue coming. Not to mention, the US can now make money from chip fees. So monitoring chips and also give Washington, D.C. a little bit more control. However, critics is saying that it's really risky and this would weaken America's attempt to stay ahead in AI. However, China's response is like, no, we're okay. Like China is not accepting the US offer. Reason why they are doing this is quite obvious. They don't trust the US. China remembers those past bans. They think that the US could change the rules again later. And reason number 2 is that they don't want the US monitoring the AI chips from Taiwan. So whenever US decided to send those chips, they actually have to check the security in Taiwan before doing so. And China actually wants food chip independency. This pushed China to double down on local chip companies. And as for China right now, it's really speeding up its own chip program under Made in China 2025. For example, there are major products, like really good products coming out from the Chinese market, like the Huawei Ascend 910C. Currently, is China's most advanced AI processor. It utilizes a dual chiplet design. It has already achieved roughly 60 to 70% of real-world performance of the Nvidia H100. And there are recent wins from the Chinese AI market as well. China's DeepSeek AI models now run on Huawei chips. Chinese firms are buying more domestic GPUs, and government orders now prefer Chinese chips first. China, what they're aiming for is actually 70% chip self-reliance by 2030, and looks like the battle is ongoing. It's going to be ongoing for years, and this fight began back in 2018 and really escalated in 2022 with chip bans during Biden administration. But by right now, so by 2025, China was 30% of Nvidia's revenue. So the ban would cut this deeply. China responded with massive investment in local chips. And this is now a technological and economic war between China and the US. Both sides fear falling behind in AI or military tech and global influence because we know where the trend is heading to. Whoever or whichever country controls AI and with the most advanced tech in AI control the whole world. So that's why this battle between US and China, it has never been more intense before. Short-term wise, some H200s might get approved from US to China, but China will still reject many imports, and Nvidia would definitely lose some sales, while Huawei would gain some ground, especially in the Chinese market. Long-term wise, China could reach AI chip parity by 2030, and the global chip market may split into two systems. This right now is not just about chips. It's about who leads the next stage of the AI revolution. So how does this relate to us Bitcoin investors? This chip fight shows how fragile global supply chains have become and how quickly tech can turn into a political weapon as the world moves toward fragmented systems and tech nationalism. More investors look for neutral, censorship-resistant assets, and Bitcoin is exactly that. The more the US and China fight over control of technology, the clearer the case becomes for a decentralized store of value. So building on that case, we now have Tesla hitting new all-time high, and we're going to spend some time looking at the reason why they just did this really good, impressive number. So this pushed Tesla market cap above $1.6 trillion. This is really impressive because remember, just earlier this year, Tesla was struggling with weak EV sales, with intense competition from China and production slowdowns. But all of that changed overnight due to one huge announcement, and that announcement being robotaxi. So Elon Musk announced that Tesla has begun testing fully driverless robotaxi in Austin, Texas. There's actually a video showcasing that a Tesla driving around in Texas, but there's no one inside the car. So this is how impressive the whole driverless system, the whole driverless tech Tesla has got into. Like this means no safety driver, no human inside, cars operating 100% on FSD. This is the first time in Tesla's history that FSD is running on public roads without humans ready to take over. This test used a small fleet of modified Model Y vehicles, and they are driving real routes in city traffic, in passenger pickups, in complex turns and unpredictable edge cases. Texas actually approved this. Texas actually approved the test, which is a big deal because California has blocked Tesla for years due to FSD controversies. This is the clearest sign yet that Tesla is getting very close to launching the real robo-taxi services. So Wall Street is liking the whole thing and they are really bullish on Tesla. Once again, it proved that this is no longer being valued as a car company only. This is being valued as an AI and robotics company. This matters because car companies trade at low valuations with huge competition coming from China, while AI companies trade at extremely high valuations. Even though EV sales hit a 4-year low, the stock surged because investors believe autonomy will be Tesla's true growth engine, but not car sales. So why Tesla is leading in its FSD so much? Like we are, there's few competitive advantage, competitive edge of Tesla. Tesla has the biggest real-world driving dataset on Earth. So over 6 million vehicles feed Tesla billions of miles of video every single day from every part of the world. Like the other competitors don't even come close, like Waymo or Cruise. They have much smaller data set. And as we know, when it comes to AI, the more data, the better, like the smarter AI would get. And second edge that Tesla has over Waymo or other options we have in the market right now, like Tesla use a single end-to-end neural network. This is one model that handles seeing, understanding, planning, and even driving the car, while Waymo and Cruise use many separate models. Tesla's system adapts much faster and improves much more quickly. And when it comes to the price and the cost, Tesla used only 8 cameras only. So no lidar, no radar, while Waymo and Cruise, they use like more than $100,000 on sensor stacks, while Tesla approach is a lot cheaper, a lot simpler, more human-like, and easier to mass produce. So here's a post between Tesla and Waymo cost. Tesla efficient only cars cost $30K, well actually less than $30,000, while Waymo lidar cars, it costs more than $150,000. Tesla is so much cheaper and way easier to scale compared to any other options available in the market right now. And the fourth advantage is that it works everywhere, not just in a small fenced zones. Waymo only works in a few pre-mapped cities, and whereas Cruise paused many operations after crashes. Meanwhile, Tesla's FSD, they can run on motorways, they can run in suburbs, in car parks, in even chaotic city streets. This scalability is Tesla's biggest edge. The final edge I could think of is the vertical integration. So Tesla builds their own AI chip. They have the Dojo supercomputer, the car hardware, the software, and the data pipeline. So competitors, they only rely on third-party suppliers. Meanwhile, Tesla, they have all the vertical control. It's much faster when it comes to updating software, much lower cost, and a lot higher margin. So if you guys haven't checked out the Cybercab, this is basically what it looks like. So the Cybercab is Tesla's purpose-built robotaxi. Inside the building, there's no steering wheel, there's no pedal, no mirrors on the side here. So it's like ultra durable stainless steel. If we look at the outside, it's looking really cold, not that cozy. And it costs under $30,000. The target ride cost is about 20 cents to 30 cents per mile. Meanwhile, Uber is somewhere around $1 per mile. The timeline for this Cybercab to roll out robotaxi, It's going to start testing in 2025 this year, which they have been doing. Cybercab production will begin in April 2026, and large-scale rollout will happen in somewhere late 2026. This is Tesla's path to a $10 trillion or even more valuation in some analyst models. So investors are really bullish right now, including myself. I've actually been a long-term Tesla holder, and I've been talking about Tesla for a very long time. I'm a big fan of Elon Musk. And the reason why not only me, but many investors are so bullish is the full autonomy driving. That is a multi-trillion-dollar opportunity. Robotaxi could generate huge profits with minimal labor costs, and Tesla has billions of dollars in cash, $40 billion in cash, and is a fee for supercomputers, AI training, and scaling. And when it comes to energy and Optimus robot, everything coming soon, coming online, new revenue streams will be added way beyond just cars. In short, Tesla's AI moment has finally arrived. I'm a huge fan of TSLA and also Elon Musk. So here's for the AI news I want to cover. Let's actually move on to some more Bitcoin native, so some more crypto news, because we have been talking a lot about macro and we spent a lot of time on AI today. So here are the breaking news. What just happened is Intercontinental Exchange, so ICE, the parent company of New York Stock Exchange, is in advanced talks to invest in MoonPay, one of the biggest crypto payment companies in the whole world. MoonPay's new fundraising round is targeting a $5 billion valuation, which is 47% higher than its last round in 2021. ICE's exact investment amount is not public yet, but the talks are serious. Still early, the deal could fall through, but insiders say MoonPay is close to finishing the round. The news went viral because ICE is not just any company. It owns the biggest stock exchange in the whole world. So if you guys don't use MoonPay, especially if you're not American, MoonPay is basically the PayPal of crypto. It lets normal people to buy Bitcoin or other digital assets using credit cards or Apple Pay or even bank transfers. MoonPay would handle all the KYC, fraud detection, regulatory compliance, and it operates in more than 100 countries. It has more than 30 million verified users and has processed over $8 billion in transactions. And this is why ICE wants in. MoonPay is the largest regulated crypto on-ramp in the world. This aligns perfectly with the whole ICE's plan moving forward. ICE has already launched Buck, which is a crypto trading and custody, and they have invested $2 billion into Polymarket and really trying to expand into blockchain, digital assets, and tokenization. Now, ICE wants a direct bridge into retail crypto payments, and MoonPay gives ICE just that. It gives ICE access to millions of crypto users and a compliant infrastructure for US expansion. This is a classic Wall Street move. When an industry returns to growth, they want to own the rails. So for Bitcoin investors, they absolutely love this news because it signals mass adoption is accelerating at an institutional level. If the owner of New York Exchange is backing MoonPay, it means smoother, safer, and more regulated ways for everyday people to buy Bitcoin, which can increase liquidity and long-term demand. This is another setup in Bitcoin's evolution from niche asset to global financial standard. All right, so that's a lot of news we have gone over today. If you guys want to check out MoonPay, make sure to download that on your app. But like final call to action before we end the show, make sure to give us a follow and make sure to give me a follow on Twitter. So my personal Twitter is gemcrypto_IO. Make sure you put _IO. And as for Roxham TV, it's really easy at Roxham TV on Twitter. We cover news from globally, not only Bitcoin, but macro news, AI news, and Jeffrey Epstein. So their point being, there's so much valuable content. We're updating every half an hour, even during holidays. So make sure to give us a follow. There's so much you don't want to miss out. My show is from Monday to Friday, starting at 3 a.m. Eastern Time to 4:30 a.m. Eastern Time. So if you don't manage to catch my show live, don't worry, the replay is also available on both Gem Cryptos and my own YouTube channel and also on Roxham TV YouTube channel. Thank you so much, guys, for watching. Happy holiday, and I'll see you guys in the next show.